Hello there, Salim Omar here from the CPA Marketing Genius podcast, bringing you another amazing episode. I've got a special guest with us. His name is Eric Neller. Eric, welcome.
Thank you, Salim. I'm just glad to be here and appreciate you having me on.
Yeah, I'm really excited and looking forward to the next little while interviewing you and grilling you on the topic of, a topic that's really very relevant to CPA firm owners, and that's helping their clients save money in any way possible to double their profits and take home pay. So before we get into the questions, give us a little bit about your backstory.
Happy to. So the 15 or so years I spent in large companies. I was in sourcing supply chain for a multinational centered in New Jersey, traveled the world, ran projects for savings for that company to the bottom line in over 10 countries. And we sourced everything from every good and service possible. Took a lot of our process online so we had to source the software, then go for the online bidding process. Did some really leading edge type of things there. So I really got a passion for the value of savings for a company from that.
Awesome. Great. So you work with CPA firm owners. How do you work with them? What's your relationship with them? In what way are you helping their clients? So let's kind of dive right into that relationship.
Sure. There's two ways that I would be able to get connected with a CPA firm. And one might be I might start there and then get to develop that relationship and ask some questions about what they're providing for their clients. Because I found a lot of times, even if something is advertised, it's not something that's done every day. So I'll give you an example of that. They might put out there that they do R&D tax credits or they do cost seg, but they may just have it there, but outsource it when necessary and not a regular basis. But more often than coming in that way, usually I'll get to meet with the CPA because I've gotten there through their client. And what we do there is we come alongside. So there's always a positive reinforcement of whatever they're currently doing. So that's the number one thing is there's no, hey, CPA should or shouldn't be doing this, because I don't know when I talk to the client what has been done yet. So we do a discovery and then we just list out, have you thought of all these things based on their area of vertical and their location in the country? There's going to be a list of potential specialized tax incentives that they can actually probably qualify for. I'd say 9 out of 10 businesses for sure are stepping over money right now that just don't know is there.
All right. That's an awesome segue into what are those things that they are stepping over without realizing.
Yeah, sure. My number one thing for this year, because I don't know about you, but everywhere I look and everywhere I go, everybody's hiring, right? So if they're hiring, my next question is, are you screening all of your candidates for work opportunity tax credits? And they're only going to have one of three answers to that as example. It's going to be yes, no, or what is WOTC, right? I don't even understand where that comes from. And if they're a smaller company, that 9 to 99 employees, they've been disadvantaged in this area if they're doing it themselves because they don't have a good way to electronically and quickly screen and track all of those candidates that are coming through. So number one, it's hard to find good people is all I hear consistently, right? And then number two, to add something to the hiring process where I'm just trying to manage turnover doesn't sound like something I can do as a small business, right? So we've got a way for them to quickly and efficiently and very cost effectively do that. And then the other side of it, not only would that be a credit to the business, but I look at who the work opportunity tax credit is pointed towards. And it started way back in the 40s as an incentive for veterans to return to business, to work and businesses to hire them. But since the early 2000s, that credit's really opened up to be a hiring incentive. So job creation. So they've made a lot more people qualified in the workforce to get that credit. So if you've got a way I look at it this way, I do the example of the follow the queen. You've got 3 cards down and you're trying to follow the queen. But if you knew one of those, all 3 cards, if all candidates were equal in all other ways, but one of them gave the business a $2,400 tax credit, why not flip that card and take that player, right? And then if they all 3 qualify, then that's great. You choose the one that fits best. And then you actually get to, as a business owner, give a little bit of a gift to the participants you didn't hire because they have a notification and a certification now that they actually qualify for that credit for their next place. So that's on the way in the door. I'm talking really a lot about work opportunity tax credits right now.
That's awesome. Great. That was useful. What else? What other incentives, credits do you see that puts more money in the bottom line?
Sure. There's a big one that has a lot of attention right now, and either known as ERC or ERTC, the Employee Retention Credit. And there's two kind of parts to this. One came about as a response to COVID and the CARES Act, and then a couple of acts that follow that got bolted on. And that's why you'll see this number kind of thrown around there, $26,000 per employee. And it's real. It is a credit or a refund, depending on how you take it. And it's not as hard to qualify anymore as it was to begin with. And why this one gets overlooked a lot is because the laws changed and the regulations changed so many times that when they first rolled it out, Salim, what they said was, if you as a business got the PPP, you got the paycheck protection, then you're not eligible for ERC. And that changed. So I think what happens, a lot of CPAs turned off to that initially because their clients got the PPP and then they said, well, you're not eligible. And I've even seen that on a lot of websites and gone back and said, oh, I see you're talking about the ERC, but you're saying you're not eligible for it, but they actually are. And, who has time to go back and keep up with all the changes the IRS made to this, right? So it's an important one to look at for clients, but it's also good to approach it with the right mindset and caution. I really cringe when I hear there's a lot of affiliates promoting ERC now through some of the big processing houses, and they're out there talking about free money. Not something that's why the IRS raises red flags, because if I wanted to come in and run a nefarious business, I could offer this credit, and as a third party company, I could take payment up front and then just disappear offshore. So that's why the IRS started to crack the whip on making sure that ERC is done well, done right, as any great CPA is going to do. You're going to document everything, going to tell the truth, and you're going to be able to calculate that credit. So it ends up being $21,000 potential for 3/4 of 21, and then $5,000 in total for year 20. So that's where you get the $26,000 per employee. And what we see is, on average, for the ones that qualify, somewhere between 10 and 15,000 per W-2 employee, up to 500. So it's something that if your CPA, if your firm is looking to add some value, which is still kind of future, so they're going to get in the queue and they're going to get in line for the IRS to send that refund back. But if somebody is desperate and needs the money now, there are even places where somebody will buy that credit for them, some VC money, and there's firms that are set up to do that so they can take less but get it now. That's going to make a real difference for firms that are like, hey, this is my last shot this year, right?
That's great. So far, 2 credits, one on the hiring process is employment credits, and then the other one's ERC or ERTC. Give us, in the interest of time, give us 1 or 2 others that the people don't think about as much.
Yep. One of the most overlooked ones is R&D, research and development tax credits. It's couched under the heading of manufacturing, so people think of it that way, but R&D brings up this image of lab coats and test tubes and doing that kind of research. And so folks don't believe that they are qualified for it. But I can say both on the software side, where if they're using multiple systems, having them talk to each other, improving that and going to a client base, that could be that technology company or that call center could be eligible for research and development. And then on an extreme example, a mining company that's making little rocks and sand out of big ones. They don't think of anything there being research and development, but because they've got some specialized processes and they're spending the money in the US and they do this year over year and they're doing some constant improvement, they actually could qualify. So the nice thing about R&D is once you do the right interview process and figure out that they qualify, they can actually go back 3 years and get that credit with interest. And then it becomes an ongoing credit going forward, given that they're going to be doing the same thing in that business model. So R&D is one great one. And then the other one that is most overlooked for businesses that are owners of the property or improving the property, think of auto dealers or hotels that own multiple, boutique and or name brand where you have to maintain the property to keep the name on the building. The investment they do on an ongoing basis in those properties is a great opportunity for a cost seg study. Because if we just come in and, okay, all things were done and we weren't looking at that first, might have just taken a flat 30-year depreciation and then just moved on. But the reality is that it's not all going to be that way. So that not so much as a refund, but as a reduction in taxes, a cost seg study is a great example.
Wow, that's amazing. That's awesome. Great. So R&D credit and then cost seg study. Got it. Good. Anything else, Eric, that you want to share that's going to be useful to a CPA firm owner, an EA that working with small businesses?
Yeah, the idea or the advice about getting out there ahead of these things and offering that, I mean, this is just the best practice. Here's what we do. And I know you're huge into marketing, and I like marketing a lot. And it's important to have that top line growth and those plans and adding new clients. But wouldn't you agree that the clients that are most overlooked are your current clients?
Totally.
So getting out ahead of that and giving them a reason, because the numbers that we hear from the marketplace and surveys is that small business owners are not only just pressured, but they're really willing to change out their tax professionals. And when you look at that and say, well, why is that? Well, I'm not a CPA, but because people see me connecting with small businesses, I get hit up from offshore companies all the time that want to handle all the taxes. And so they want to come in. So you're, as a CPA, you're dealing with that competition from offshore. You're dealing with just the software that keeps getting promoted that you don't need anybody. You can just do this yourself. And there's some basic functionality there. But the whole thing about attracting and retaining and making yourself really built into that customer's business and deepening that relationship is what I would say, get ahead of it and look at these other opportunities that might be available.
Yeah, makes a lot of sense. It's really value, right? I mean, folks, businesses hire a professional. It's not for it's for the commodity type service, the tax prep or the accounting stuff, but the real stuff comes in when it's complemented with value-added services, value-added advice.
Yep.
And that's where folks like yourself come in. What's the best way? This was so useful and insightful. I really appreciate it, Eric. What's the best way for folks to connect to you?
Well, the best thing to do is I've created a framework called the Small Business Saver Framework. And in order to help, I'm just giving that away, but I'm also doing training, and I'm starting out doing at least once a week on Thursday, just Q&A sessions. So to go to the www.thesmallbusinesssaver.net, and then that'll take you right to the main page. If you want to see the training, just the /training on there, and that'll get them to the topic of the Thursday live Q&A. So that's sort of the best way to get in touch with me and then see what the topic of the week is and jump on and get some value.
Got it. And during every week, are you doing a deeper dive into one of these topics that you shared?
Yeah, I'm going to let the audience kind of dictate, at least as for the first quarter or so, because I'm leaving it broad enough to cover a lot of what we talked about today. But as interest gains, so for example, right now I'm working on a continuing ed online credit course to cover ERC for someone. So I know that this is a big topic that is getting a lot of attention. So maybe that goes down that path. But the whole idea at first initially is I'm not coming with much of an agenda to just flip through slides. I'm just coming with, you've seen the AMA, the Ask Me Anything or the QAs, in that vein of specialized tax incentives, operating cost reductions. And like somebody told me, and I took it to heart, get your slogan so it'll fit on a t-shirt, slash taxes, double profits. Anybody that's interested in slashing taxes and doubling profits, jump on, and that's what we're going to talk about.
That's awesome. Beautiful. Great. Thank you so much, Eric. Really appreciate you coming in and sharing the insights.
I appreciate the opportunity, Salim. Keep up doing the great work. I love what you're doing, be out there promoting and helping the CPAs grow and market their firms.
That's awesome. You take care, man.
Stay well.
Bye-bye.